Hello and welcome. This is the F&O Show on Bloomberg Quint Live, India's first digital live news streaming and business news service. I am Agam Vakil, and here are the headlines. Indian markets edge higher with the Nifty crossing 12,000 as energy stocks gain on the back of lower crude prices. Open interest surges in Berger Paints as traders take fresh long positions, and this is after a stellar quarter. ONGC is trading with gains of more than 1% despite reporting, relatively lackluster numbers for the fourth quarter, even as crude prices fall. Prime Minister Modi and 57 council ministers take oath. Both portfolio allocations are yet to be made public. On that note, let's take a look at, how the futures and options markets are trending at this point in time. Starting off with the futures, we're clearly looking at some gains coming through, even as the underlying continues to advance, up by another 0.7%, and the spot is comfortably above the mark of 12,000. What may be a little bit surprising is the kind of premium at this point in time for the June futures. But if you leave that aside, we're certainly seeing a lot of gains coming through. Open interest up as much as 2%. For the Nifty banking futures, the picture is not very different. Good gains coming in there as well. Here the premium stands at 33 points, and your open interest has increased by as much as 5.5%. Now, this is as far as futures go. Take a look at the wicks too. And this may be taken with both hands as far as traders go, considering there's a further drop in the wicks. And now it seems that it may very well go below the mark of 15. And this may also be after a very, very long time of about 8 or 9 weeks, if I'm not mistaken. Now, this is as far as your June 6th open interest distribution is concerned. This is the upcoming week, basically. And this is where you see 12,000 mark as the one with the open interest. If we actually can pull out the 27th June open interest as well, that would give us a better picture of the monthly expiry, because that perhaps becomes a little more important, and also something that we can this is where we're seeing 12,000 mark is basically what we need to watch out for, and 12,500, at least as far as the monthly expiry is concerned, is what we can keep an eye on moving on. So there you have, that's a 27 June monthly expiry, and as I was suggesting, is a 12,500 call. And on the lower end, we're keeping an eye on now levels at around 12,000. So, that's as far as the put is concerned. Also a word on the handful of stocks which are buzzing in trade today. And in terms of open interest gainers, there are quite a few. Berger Paints is making a surprising up move. It's now at the day's high, up 9% nearly. 34% added in open interest, a lot of longs coming in there, as is the case for Ujjivan Financial Services. We just spoke to the management a few moments ago, and we're seeing some gains there as well. But what is not working out in favor of the traders is NCC. In fact, looking at a decline of 10% in spot, 15% added in open interest, and we will address this in a little more detail as to why NCC is taking a knock. Gen Irrigation is also looking at a severe decline. This is again largely on account of earnings. And Coal India also looking at a 12% surge in open interest, even as we see a steady quarter come through. That's stock is up 2.3%. Let's talk about stocks which are unwinding. Not too much to speak for. Early days in the series, which is why we don't have too much traction in terms of decline in open interest, say for something like a Max Financial. Now, we're going to keep an eye on a whole host of the stocks that we did see a surge in open interest. But let's take a look at the stocks that we do want to address in today's day of trade. And, naturally, we are going to take up something like a Berger Paints because of the kind of surge that we've seen. I've already spoken about Coal India. And in fact, I've also spoken about Ujjivan Financial Services. So we will be addressing these stocks with our experts in today's day of trade. Now, before we get in our experts, here's a reminder: if you have any queries regarding futures and options markets, you can call us on 022-454-04141, or of course, write to us on Twitter, Facebook, YouTube. But don't forget to add the RSPQ hashtag. Let's get in our experts for the day. That we have Bhavin Mehta of Dolat Capital joining us remotely, and Ashish Chaturmohta of Sanctum joining us here in our studio. Good morning to both of you, and thank you so much for taking the time out. Ashish, as usual, let's start with you. Where do we go from here? It seems like we're We're looking comfortable about the mark of 12,000. What's your view here?
Good morning, Agam. So yes, I think we are comfortable with this mark of 12,000. We hit an all-time high on 23rd May, which made a all-time high somewhere around 12,030. Then we saw some consolidation between 11,600 to 12,000, and now this breakout about 12,000. So typically 400 points consolidation, and now there's a fresh high which we are witnessing. So I think we are extending towards 12,250, 300 kind of zone in next couple of few trading sessions, and I think going forward now 11,950 itself is going to be a crucial support in a shorter term time frame, which traders should use as an opportunity to create any long positions on any dips with a stop below 11,950, and on upside can look for a target around 12,250 to 12,300 zone.
Okay, so that's Ashish's view on the Nifty. Bhavin, good morning to you too. Are you also as constructive when it comes to the benchmarks from here on?
Okay, so overall range shifts has been observed. We are looking at base formation at higher level from the option point of view. At the same time, OI concentration seen in the range of 11,500 to 12,500 continues to look for more upside going forward. However, having said that, Indian markets as such are trading way above the 20 and 50 day moving average in comparison to global markets. So, considering any of the global indices, none of the Asian or European or US indices are trading above 20 and 50-day SMA. So, our sense is that while overall positivity should continue, however, at the same time, will not rule out some amount of consolidation in this range between 11,800 to 12,000.
Okay, so that's Bhavin's view on the indices and specifically the Nifty. But let's also take a look at what we can do with the Bank Nifty. Ashish, do you expect that to move in tandem with the benchmarks?
Yeah, definitely. I think it's again a very strong breakout which is taking place. I'm expecting Bank Nifty to extend towards 32,400 to 32,500, which implies a decent 700-800 point rally from current levels. For that, I think one need to keep a deeper stop loss somewhere around 31,450 to 500 zone. But definitely, it's a strong breakout. And if you want to see individually private sector banks, then I think Axis Bank is one which is looking poised for a strong move towards 840 850 zone, and for that I think 800 should be kept as an trading stop loss. And even State Bank of India is showing a very strong traction where one can expect move to extend till 375 380 zone. So I think these two large cap names looks quite promising within the private sector, within the banking basket
space. Fair enough. Bhavin, you do have a call on the Nifty, and well, you're looking to sell an option. Can you tell us a little more about that?
Okay, there is one more event lined up going forward next week. That's the RBI monetary policy. We are anticipating market to hold this level of 11,800. The way overall option built up or overall future built up has been observed. As my colleague has said, Bank Nifty continues to look good. So we are recommending selling Nifty 11,800 put in the range of 100 to 110. Stop loss close to about 130. Target price is close to about 40. This is for a June 27 expiry and not the current weekly expiry. Having said that, also just want to point out that premium on Nifty future remains low. That is particularly on back of the dividend month. We are considering a dividend points of close to about 35, 36 points on the Nifty, on back of which we are looking at some amount of decline in the premiums.
All right, so well, that's on the benchmark indices. Of course, Ashish has spoken to us about certain stocks on the on banking index too. But Bhavin, if I can come back to you on stocks, which ones are you betting on? Which ones look interesting to you today?
Okay, so one of the stock you have already mentioned, Coal India. The stock declared numbers yesterday. We have seen good amount of uptick in today's trade in the initial trade. However, looking at the way overall behavior in the stock price is concerned, we are looking at stock once again drifting lower, probably closer to level of 252 to 250. So recommending a sell on this particular name in the range of 260. stop loss 263 for target price of 252. Second strategy would be to buy Kenfin Home, which is currently quoting around 371. Stock is witnessing a positive breakout in trade today after a good amount of consolidation in entire last series. This is a bit high risk trade since the breakout is happening in today's trade. Buy this particular stock for target price of 400 in mid to short term. Current market price 371, stop loss 365.
Okay, hold that thought, guys. Let's address earnings too. We have Greenland Industries, which reported a 30% jump in its bottom line while margins remain flat. Let's discuss the quarter gone by with Saurabh Mittal, the MD and CEO of Greenland. Saurabh, good morning, and thank you so much for joining us. Can you take us through how you are assessing the performance in the quarter and what we can expect in the upcoming financial year?
So in the quarter, the revenues were largely satisfactory. We grew by about 16 odd percent. The consolidated revenues were at about 360 crores. On the margin front was a little bit of a disappointment on the newer business, the flooring and the doors, where though revenues were up, but the margins, the EBITDA losses could not be reduced. Rather in one of the categories it went up. The margins in our core category, which is laminates, I think that was quite satisfactory considering the market situation and the raw material costs. So by and large, I would say satisfactory results for the quarter. And for the year, I think this year too, we should be looking at a 10 to 12% kind of a top line growth. And margins will really depend on the cost structures which prevail this year. And as last year we had higher raw material costs, there were currency depreciation issues, and costs for most of the chemicals, graph paper were on a higher side. And really, it will depend on the cost structure this year. So yeah, that's the view for financial year 20.
Saurabh, but my question then is, if you already addressed raw material costs, but if you leave that aside, in terms of other operational metrics, is there a possibility that we could see an expansion in margins going forward?
Well, it will really depend on the value mix and how the new businesses perform. So I can't say too much here on whether we'll be able to expand margins, but obviously our endeavor is to improve revenues, improve margins, and continuously work towards improving return on capital and return on equity. So that's a constant endeavor in the company. Whether it will or will not happen, I can't say much on that. But yes, that obviously is our goal to improve margins also as we expand revenues.
Okay. Can you tell us a little more about your expansion plans as well? If you have what you have in store for FY20, what can we expect here?
So on the expansion, we've announced the capacity addition in our laminates category. So we're adding one more production line. So the capacity will expand by about 12%. So the new capacity should be on stream within quarter 3 of financial year 20. So besides that, at this moment, there aren't any major expansion programs. We have adequate capacities across other categories of business. So really the focus will be to make these capacities run correctly and before we get into another expansion mode.
Okay, Saurabh, the traction on ground when it comes to projects, it's not the most encouraging, and by that I mean mostly and largely real estate projects. Considering you are in decorative laminates and allied products as well as veneer and allied, what is your feeling on ground? What are your observations? How are processes picking up right now?
So as you rightly said, in the domestic market, the projects, the real estate situation, the interior construction situation is not the most promising currently. And while having said that, I would say the commercial part of the business is looking better than the residential part currently as far as our business is concerned. And in our business, the other advantage we have over several other competitors in the space is nearly 45% of our revenues coming from the international market. So really that part of the business is not so largely impacted by the so-called domestic little bit of slowdown in the real estate and construction activity. But yes, markets remain challenging, and we continue our efforts to expand distribution, increase our footprint, increase our specifications with architects, consultants, and our presence in the projects.
Okay, fair enough, Saurabh. We'll leave it at that. Thank you so much for joining us and talking to us here on Bloomberg Quint. Well, of course, the shares of Green Lamp Industries are doing well today. They're up as much as 2%, currently trading at 881, pretty steady. Not too much traction in terms of volumes, but still holding on to that 21 rupee gain odd. But let's move in and talk about some stocks that I'd also want to take Ashish's view on. Ashish, stocks that, besides the two banking stocks that you spoke about, what are the other ones which are looking interesting?
In terms of my bets, I think my first bet would be a long idea on Cholamandalam Finance. Looks very promising. It's a strong breakout on a weekly, monthly chart frame. Strong addition of OI in last two trading sessions, and even today we are witnessing some significant OI addition in the stock. So I think this could be initiated as a buy. 1505 should be the trading stop loss for going long into the stock. 1620, 1630 could be a short-term target one can expect in Cholamandalam. Kajaria Ceramics looks very promising. I think this is again a strong breakout on a weekly chart with decent OI addition. So I think this could be bought. 635 would be my trading stop loss. 680 could be a short-term target one can expect in Kajaria Ceramics. And in the specialty chemical, we have been very, very positive within that. SRF is one name which looks promising to us. 2860 would be my trading stop loss. 3050 could be a short-term target one can expect in SRF as well.
Okay, well, there you have it. Quite a few ideas coming in from our experts in today's Day of Trade, but let's also talk about some stocks that we want to address. And I'm going to start off with Berger Paints because that's clearly the big gainer of the day. It's up 8%. Open interest has surged even further at 42%. So that's a clear case of longs coming through. It's currently at 326, 327. And what it's actually done is after today's sharp up move, it has moved back above its crucial daily moving averages. We must also remember that it may have seen a very wide range, but it's still, largely around the same levels as it was. And we all know about the kind of challenges that the paint companies have been going through with respect to, the various aspects in terms of crude. So there you have it. It's up 7% through the course of 3 months, and with gyrations, some very sharp up moves as well as declines coming through. It's firmly above the 200 daily moving average, as is the case for its 50 daily moving average. And the question really is, what can we do here? So, Bhavin, I'll come to you on this one. What's your view on Berger Paints and how would you address? Would you initiate fresh longs?
Okay, so if you look at since August 2018 highs, the stock has not been able to breach past level of 345, 350 on the upside. We have seen multiple tops since then, at least twice in the range of 340. These are the major peaks that we have observed. So while today's up move can continue on Berger Paint, we may see a move closer to level of 335 to 340 in very short period of time. However, given the overall chart pattern, would not recommend a fresh long at this particular level. However, if at the same time, if it is able to break past level of 350 on the upside, one can initiate a fresh long. Till then, we'll look at that level of 335 to probably exit from the long position.
Okay, so that's the view on Berger Paints. Moving on to Coal India, and Bhavin's already spoken about Coal India, and he isn't very positive on this one, but it is doing well today. It's up 2% in trade, and its open interest has surged as much as 12.7%. Of course, the reason why we are seeing strength in this one is because of relatively better set of earnings than expected, with the revenues rising 7.5%. There is an improvement in margins, but of course, that's because of the extremely low base in the quarter. We've also seen, about a 36% drop in the employees' expenses because of lower contractuals and repair expenses. But that's as far as fundamentals go. If we can also pull up how Coal India has done through the course of the previous 3 months in comparison to the crucial daily moving averages, and could give us an idea about what, and how things stack up. So it's gained 13% over the course of the 3 months, and there you have it. In terms of its daily moving averages, it's very recently moved above them. So it's been an interesting move, but as we all know, Coal India isn't one of the most preferred trading stocks, at least in the futures and options space. But that said, we can take this up. Ashish, Bhavin clearly is not very positive on that one. Would you be a contrarian to that view, or would you actually also sell Coal India?
No, I won't sell, but I won't buy also. I think for me, it's in a no trade zone. One should avoid it, but definitely in a very short term, some kind of positive momentum is set in. So a lot of people who are stuck in the stock, they might look for some view, and for them, I think there is a possibility stock might try to see an upside towards 270, 272 zone. Ideally, around 270, 272, you might see some profit booking coming in. But definitely, I think the way the OI addition is happening, the way in a very short term the momentum is set in, I think 254, 253 is going to be extremely important support zone which the stock is going to hold on, and on upside it will try and attempt to see 270, 272 kind of zone.
Okay. I also want to address Shriram Transport Finance because that's up about 8%, and we've seen gains in this one after a really long time. So it's currently at 1205, and even though it's trading at a discount, it's June futures, we are seeing a surge of 11% in open interest towards fresh longs. Bhavin, any view here? How would you address Shriram Transport Finance?
Okay, both Chola Finance as well as Shriram Transport continues to look good at this particular point of time. However, having said that, for Shriram Transport, it would be crucial to move past level of 1250 on the futures front. Stock is already trading at some amount of discount. We have seen multiple supply zone in the range of 1250 to 1270. Unless the stock is not able to break past the same, believe that overall range for the trade continues to remain between level of 1000 on the downside to 1250 to 1300. Of course, it's a broad range for the stock. However, nonetheless, that is what we have observed over last couple of months.
All right, and perhaps we can also address Ujjivan Financial Services. Well, it's a mixed quarter. There is no doubt about that. But while we have seen some steady increase in its top line, we've seen some mixed moves when it comes to some of those variables which come lower down in as far as your income statement goes. Your open interest, though, has surged 20%. And in terms of some other news, if I'm not mistaken, we do have some new entrants taking directorship at the microfinance company. So we'll be getting more news on that one. For now, the stock is up as much as 4%. And we're looking at a very slight discount, not too much to speak for, but let's take this up with our experts too. Ashish, Ujjivan Financial looking interesting, but what would you do with this one?
See, I'll wait for a breakout about 358 to happen because that's the area where multiple times the stock has failed to cross. This time, if it manages to cross 358, then the rally can be very sharp, and then the stock might extend till maybe 390, 400 zone also. But for that, I think I will wait for a clear breakout about 358 to be seen. Once that happens, then I think with a stop below 345, I would initiate a long. But at this juncture, I'll just keep it as a hold position.
Okay, well, we've more or less sorted most of the stocks that we wanted to address, and while we also want to talk about NCC, I'm just going to wait a little and I'm going to take a viewer query here. So we do have Tamil Selvam, as far as his query is concerned, it's to do with the Bank Nifty. Is the June futures, he's bought 2 lots at around 31,800, and he's bought 5 lots of the 31,800 call. He seems quite bullish on the Bank Nifty. Of course, the June one is the 6th June one. So will this strategy work? Well, as far as I understand, considering he's pardon me. He sold the June futures. He sold the 2 lots of June futures, and against that, he's bought calls of the 31,800 calls for the weekly expiry. All right. We've already taken Ashish's view here, so I'm going to take Bhavin's view on the Bank Nifty. Bhavin, what do you make of the Bank Nifty, and what would you make of this strategy? The viewer has sold futures at 31,800, and he's bought the 31,800 call options?
Okay, so basically what he has done is he has hedged his position going short on the Bank Nifty futures. My sense is there is possibility of some amount of retracement. However, in short term, what we have observed historically is that prior to RBI's monetary policy, we have seen good amount of upmove coming in for Bank Nifty. So definitely, I would suggest him to exit his short position on the futures the moment it moves lower, probably closer to level of 31,200 to 400 over next one or two trading session, and not to hold it till expiry of the June futures. So definitely would recommend to exit once it moves in that particular band.
Okay, fair enough, guys. Perhaps the last aspect that you wanted to address was NCC. But before we do that, the infra and construction stocks with the exposure to Andhra Pradesh are in focus after news reports suggest that the new Chief Minister, Jagannath Reddy, has cancelled certain projects sanctioned by the previous government. And we have Nikki Mirchandani who's standing by to put things into perspective. Nikki, what are the updates here?
Right, as you've just mentioned that the new government, which is now led by Jagannath Reddy, they have cancelled some of the projects. Now, these are essentially those projects which have been sanctioned before April 1, 2019 and which have yet not started work. So these projects now stand to be cancelled. According to a PTI report, some of these projects are Ramaya Patnam Port, Bandar Port, Amravati Iconic Bridge and a lift irrigation scheme. The companies that which are estimated to be impacted by this development, however, not clear as to the hit is there for these companies. NCC typically has done work in progress of around 6,000 crore for APTIDCO housing project, 3,000 crore for Amravati redevelopment. Overall, if you look at their order book and the exposure in Andhra Pradesh, it's to the extent of 30 to 35% as per the con call and also few brokerages. If you look at the value terms, it's 14,000 crore to Andhra Pradesh as compared to a 40,000 crore order backlog. We spoke to NCC and the management has yet not got any formal communication coming in from the cancellation of project. They will be only able to comment once they get any clarity on the new government directive in this regard. But if you pull up the con calls, they've said that they're a 40-year-old company now and they've seen political cycles. They remain still bullish on the sector as a whole, and at a worst case scenario, if this comes true, there may be 3 to 4 months of delay in receivables, which in turn you are seeing NCC stock also having a bearing on this account of this and almost sliding in trade. However, they are still viewing this development positive, but then also bear in mind the fact that some of the cement companies which are typically operating in South region, be it in the likes of Ramco Cement or for that matter India Cements, they are also expected to take a hit to affect, demand could be compromised till the time clarity emerges when we have new projects on board right now. Orient Cement and Shree Cement also operate in this region, but then we are not seeing any typical major reaction coming on these counters. Back to you, Bhavin.
Okay, Nikki, thanks for joining us and taking us through some of these updates and developments. But I'm going to go back to NCC and talk about that before we can wrap this show. Of course, as far as your open interest is concerned, it is also one with significant increase there. The stock is down 12%. Open interest is up as much as 17%. Ashish, would you advise any trade here on the back of what are the commentary that we've heard?
No, I would avoid any trade because I think the setup is has changed. Otherwise, yesterday when we were seeing this, there was a strong Y addition on the long side. Suddenly, this is a news, and now you are seeing a huge short build-up. So I think it's going to be a little tricky to trade NCC at this juncture.
And it certainly is, because we still are yet to get any confirmation on this aspect. Remember, guys, and the only thing that the stock is doing is factoring in some sort of speculation at this point in time. We do not have any confirmation on any projects, but I'm going to take a moment on that note to thank both our experts, Ashish and Bhavin, for joining us and taking us through their views and, of course, solving some of these viewer queries. For more updates on the F&O space, you can check out our website out, bloombergquint.com, specifically the futures and options pages. And on that note, it's a wrap on this edition of the F&O Show. For more news and updates, stay tuned to Bloomberg Quint.